What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is September 29th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about what I believe may be a make or break moment here for the broader crypto space in the near term. As we've been relatively neutral here throughout the month of August, and really looking back on the longer term trend here since back in March, I feel we're in for a significant move here that's going to determine the further trend direction for the months to come. And it's not just Bitcoin that's signaling this, but a whole range of other cryptos out there. We've got a lot to unpack here in today's video, so if you guys happen to enjoy the video, consider dropping a like. It's one of the greatest ways you can support the channel, and let's go ahead and kick off the rambling. All right, guys, as we're coming here towards the close of the month in September, much like August, has been a relatively uneventful month here in crypto markets, as we've been generally pushing sideways here. The key point, though, that I do want to signify here is that at the end of the day, we are still setting in relatively lower highs and lower lows for the most part, albeit here we did see an expansion from September 11th here towards September 25th to the upside. So again, price is coiling in here, and this is why I want to spend some time to talk about this topic of Bitcoin essentially and crypto as a whole going through a make or break moment. There's a big reason for this here as to why I'm talking about it right here, right now, because not only is the price action starting to signal that, hey, something's got to give here, like in either direction. If this is a bull market, we should be seeing buyers coming at this level and sustaining a further rally. And outside of that as well, if it is a bear market, to be completely candid, which we lean towards, we should be seeing some more trend direction to the downside here in the near term. If this just continues to push sideways and Bitcoin starts to diverge from the performance of global equities, then that could be a positive sign of a decoupling here where Bitcoin could continue to rise higher. I'm completely open to that potentially happening. I don't think it's likely, but I'm never going to say never, right? However, the big thing here that's really gotten me concerned is the increased volatility within equity markets, or more specifically in the call and put options around the S&P 500 or the volatility index, the S&P 500 volatility index. So this is really important to be tracking here when we're trying to determine risk on or risk off periods here. And as many of you might know already, some of you may not, it's fine, volatility works inversely to usually the performance of assets. Sometimes there can be periods where volatility goes up in stock prices or crypto or risk on assets go up. But generally speaking, when volatility moves up, it is a sign of further correction in valuations or bearish price action. It's a simple way to look at it, and it's the likely case scenario here if volatility continues to accelerate. Well, we've been moving up here in the VIX from the relative lows, this triple bottom we set here between June, July, and September. And we can see around 12.8, we've accelerated up here to current values, 17.3, and we're at 19.7 the other day. This is the highest volatility we've seen since back in May. Now, I want to bring it back here to Bitcoin because essentially speaking, as we've been going sideways here, price is likely going to be choosing a direction here soon, especially in this environment. And again, as we talked about here, either the bulls have got to come here and show up soon, or we're moving to lower levels here, right? And it's not to say that this is going to mean that, when I say make or break, I'm not saying we're going to go in an absolute straight line to the downside, nor when I talk about Bitcoin collapsing or having a major correction or continuation of bear market, nothing moves in a straight line like that. But essentially, we are at least here in the near term moving towards lower levels here. Now, I want to go ahead and spend some time to talk a little bit here about some of the other altcoins in the market, because I think there's a lot more telling signs, not just on Bitcoin, but more specifically on altcoins, about sentiment and where we are here within the market. The biggest giveaway here is Ethereum. Now, Ethereum itself, at the moment on a general kind of annualized basis, because of EIP 1559 and it's the merge to proof of stake versus proof of work, all these things have provided a monetary kind of surplus or benefit for ETH's price performance. And that's why we had this ascending triangle here, because a lot of people not only were buying in anticipation of these things and excited about it and how it would help Ethereum, but on top of that, really, it does have a minor impact here on the supply dynamic here. We used to be kind of accelerating up into the right in supply with the proof of work rewards, but proof of stake cut that reward rate, and we have EIP 1559 that starts to burn supply, essentially, that gets created over time, essentially when people utilize the network. But the big thing here I want to focus on is purely price action, because some people will say that all these things are reasons for ETH to go to 10,000. Some people say that they don't matter at all and ETH's going to go to zero and it's useless, yada yada. I'm not here to pigeonhole into either of those positions. I more importantly care about what the market is saying right now. And essentially speaking, we clearly failed a long-term ascending triangle, which is a bullish pattern. So we failed this long-term, year-long bullish pattern, which holds incredible significance. And right now, you can see over the last, kind of week here, we're looking at the 3-day chart. Maybe we can take it here to the weekly. Essentially speaking, this week, we are trying to deviate back in here to this channel, maybe have a chance to come back up here and retest this level up here at 2,000. But the thing is, to be honest, guys, we've already spent about 2 weeks out here. And the more we continue to face resistance at prior ascending support, this is a really bad sign. It showcases that there's not the bullish liquidity to continue driving us forward here, at least not at these prices. And that doesn't mean, as much as we believe Ethereum could go to a couple $100, I know it sounds far-fetched, but it very well could happen. We've had much greater corrections at Ethereum in the past versus what we're calling for here, somewhere between 500, which would only be an 89% correction, or coming down at max towards a similar level to the last bear market, which would be a 94% correction, or around, roughly speaking, $300. We think somewhere in that ballpark ETH can definitely go to. However, even if it doesn't go straight down there, right, to the bottom right and down to that range, we still may very well see that Ethereum comes down to test this prior low range at around $10,050 to $10,075, or excuse me, $1,075, right? And we can see that the weekly trend momentum has been red since back here in mid-July. So I think what's happening here is the market's starting to wake up to something. They're waking up to the reality here that essentially Ethereum has not really gone through a proper correction so far against BTC. It's only gone down around 31.4% from the absolute highs back in December of 2021. And we've been calling here for a long time, for over a year now, that this is going to do at a minimum a 40% correction to test the long-term line of support. That's at a minimum what I'd be looking for here to build a long-term accumulation position, because it has to do with a long-term support line since as far back as December of 2016. This coming up here on the next December we're going to have this year will essentially make this a 6-year trend line. There's a lot of significance to that here. That's a lot of time history here for ETH's price action and crypto as a whole. Now, I want to go ahead here, and again, as we go through this conversation, I want to talk about these upgrades that essentially make ETH ultrasound money. That's the narrative that, because of EIP 1559 and essentially the move to proof of stake, that this now makes Ethereum a consistently deflationary asset that cannot grow in supply and will essentially, have its supply burned over time through its usage as there's more applications and exciting use cases. And from there on out, it's going to be more and more scarce, and therefore the price is going to appreciate, right? That's the narrative that everyone would say. But I want to point out something really interesting here. There is a clear dynamic here. Once the burn was initiated, this already slowed down the acceleration in ETH's supply growth. So we can see here that still we were accelerating at that time. But once we moved from proof of work to proof of stake, that really did, over the past year or so, right, this really started to kind of plateau, essentially the acceleration of ETH supply. It's been a little over a year now. And from here, we've seen ETH supply go from 120.5 million down here towards 120.2 million. So essentially, we're cutting back by about 250,000 ETH so far since the merge event happened. And to be honest, that is definitely better than Bitcoin and many other cryptos that are inflating in their supply. That is definitely a benefit for ETH. However, over an annualized basis, that's a deflation rate of 0.2%. Now, I know that that sounds exciting to a lot of ETH bulls, but I gotta ask you guys here, is it really going to save Ethereum long term? And not to mention, can we guarantee that that deflation is always going to be at play? Because over the last day, we've seen here that we had an increase in the supply. We have an increased annualized rate of 0.32%. Over the last 7 days, we've maintained an increase of 0.34% year over year. And we can see that the inflation rate here has been 0.2% over the last 30 days. So essentially speaking, I know that we're kind of looking at a shorter term time frame, and yes, we can see here that obviously this is a short term window, but we are seeing a reacceleration here. And this is a point I want to bring up before I get towards the real point you guys need to keep in mind. One small tidbit to keep in mind here is the fundamentals. Ethereum here, in order to really benefit from EIP 1559 and to become deflationary, it depends on burning ETH and using ETH for gas fees and people paying high network fees. And layer 2s using Ethereum as kind of the base layer here, layer 1, in order to store that layer 2 or roll up transactions on, right? Using that on-chain available block space. The key point here I want to mention is if we don't have any DeFi applications, if DeFi itself remains stagnant for the next year or two, you're not really going to see much deflation in Ethereum supply. Nonetheless, I would say here that generally speaking, the idea that Ethereum could roughly, in the long term, have generally seen a cap in its supply at 120 million, I think that's definitely a good thing. Okay, so I'll say that right out the gate here, and if we have some times we go up, we go down, whatever, probably going to be around that range for some time. But I want to go ahead and get back here to the fundamental thing that everyone needs to know about. This is the important point, guys. Just because Ethereum, even if Ethereum burned a percentage of its supply every year, which would be great, is it enough to counterbalance the imbalance between market sellers and market buyers? If there are more people willing to market sell ETH in total net terms versus buy Ethereum, and I understand there's always a buyer and seller on each side of the trade. I'm talking about market sell orders versus market buy orders. People taking the best available price to go from one asset to another, or going from an asset to cash, right? And vice versa. If there are more people who are willing to take the best available price to sell ETH versus those who are willing to take the best available price to buy ETH, that is what drives trend direction. You can have as much bid or ask resistance or limit orders on either side of the trade, but at the end of the day here, you are generally going to see that whatever direction has more market buy side or sell side pressure is going to determine trend direction. And right now, this has been for the last, really like 4 or 5 months here, has been shockingly revealing truth as ETH has corrected more than $500 here from the relative highs at 2100 and failed multiple breakouts at around that $2,000 range, which is critical for ETH to pass in order to confirm a bull market. It is showcasing that we don't have the FOMO, we don't have the buy side liquidity, we don't have the market buy side buy side pressure that's really going to drive a long-term rally, but rather we have distribution. We have people taking advantage of ETH coming up to this price range of 2,000, which was like Bitcoin had, as we've talked about before, the prior support range during the last bull market. And that's really not a good sign to see. That sets a psychological tone here that people don't feel ETH has the steam to get back up to those prior valuations. It's not me saying it, it's price action, guys. It's price action here, especially when you break a year-long ascending triangle. Now, it's not just me bashing on ETH. ETH definitely has its fundamental issues, but the whole crypto space, unfortunately right now, is not feeling the FOMO. It's not feeling excited about DeFi. There are no killer new applications out there. I've asked so many people to do this, and I mean it in a good heart here because I'd love to go and find some really cool applications. Send me one cool decentralized application you're using right now. I beg people to, you can put it in the comments. I'll check it out. Don't just show me your altcoin. Don't just show me your protocol because it does so many transactions or whatever. I want to see a really cool application that I know I have to use. That's the kind of stuff that I noticed back in early 2019 when I spotted the trend in DeFi. I had a lot of participants in the market. That's why we built my own crypto wallet that was focused on DeFi as far back as 2019. I love focusing on innovative trends, not just in crypto, but also in broader sectors. And I'm quite good at spotting these things early on, but I'm not seeing any right now, guys. And that's not because I'm just being bearish and negative or I'm short the market or anything. No. It's just because at the end of the day, I'm keeping an honest opinion here about what I'm seeing here in the market. And essentially speaking, I'm not hearing any music. The music has stopped. And that is apparent here if you take a look at a whole range of cryptos. BNB, which unfortunately continued to extend itself against Bitcoin, going into November 2022 is just continuing to bleed here, as I think it got overextended. And it's likely going to come somewhere back at a minimum here towards this range that was prior resistance back in February 2021 and April 2019. That's another 25% correction to potentially 38 to 40% correction here in price. And if it were to break this line of support here, that could spell really bad news here, right? If we go lower here, hopefully this will be the range where buyers would come in to provide support. But either way, this is looking to be around a 70 to 75% correction here in the price of BNB versus Bitcoin. And that's the kind of ranges where I might start to get a little bit interested if Binance is still looking financially sound, right? That might be the range to be interested. But I got to tell you guys, it looks like further corrections coming here. Our momentum indicator is showing clear red momentum here, and it's been doing so really ever since back here in December 2022, right near after when the top was set in. We lean into our indicators, guys, because it has helped us from buying, trying to catch falling knives, trying to buy every dip or DCA, when in reality, this is continuing to move lower and lower, right? Just for perspective here, so far BNB has continued to go down nearly 60% versus Bitcoin. So it's important that we keep this in mind here and that we don't feel we need to FOMO. Cardano here as well, hopefully for bulls, trying to find support here on this line of support since October 2017. If that does not hold, if we don't catch a bid, right? See, the momentum has been overwhelmingly red here, right? There is an opportunity, but they've got to show up at the plate. If they don't, next level is down here at around 460 sats. From this point on, we've not only seen from top to where we are now around an 85% correction, but that takes us down towards a 92% correction, 92.5% in price. And again, people are saying, well, that's a small percentage difference, Nick. Why does that really matter? Well, if you really measure from an entry point here down to here, you're talking about a 50% correction. So the reason I emphasize this is that you could buy twice as much Cardano if you wait for that level, if that's the new low, versus this one. I'm not saying you have to wait for that absolute level, but even if you started at a 33% correction from where we are now to a 40% correction, right? You're talking about substantial discounts. And it's very likely that Cardano could come to this range, which also was a prior support and resistance range in the past, right? So again, just bear that in mind, guys. We lean into our momentum indicator. Most importantly, it's not about catching bottoms here in this market, even if you have a more optimistic tone. It's about knowing when the trend is giving you clear signals that it's time to get your ticket for the train and enjoy the ride. That is what a professional trader is going to tell you. So many people are focused on DCA, and unfortunately, dollar cost averaging can really leave you getting burnt, because DCA is betting on the precursor that essentially crypto is just always going to go up and to the right. And unfortunately, that's not the case. Crypto can have long extended bear markets, and I think we're seeing it right now. Along with that as well, take a look at DOGE. And DOGE is trying to find support here at the same range it did in June of 2022. Right, we've been setting in lower highs and lower lows in the short-term time frame, the long-term time frame. If it can't catch a bid here at around 200 sats, we're likely coming down here to 150 to 120. That would be a range where I would get really excited here for Dogecoin, especially when you start getting closer and closer, even down here to potentially 100 sats. I just don't think we're going to get it. But generally speaking, getting somewhere around that 90% correction to potentially 88 or 92% correction, that would really interest me for a momentum play like Doge. So we'll see how it goes. Again, I don't want to speak too confident on it, but generally speaking, from here on out, if that this level up here breaks, you're talking about another 45% correction. That's going to be painful. So we got to protect and preserve our liquidity here, guys. We want to buy into capitulation every single time. If we take a look back here, when Doge set in bottoms and then rallied 270% or 112%, or month by month 73, 79, and 114%, or here in December 2017 200% against Bitcoin, or here in January where it went up 600%, or 542% in April 2021, always came after a capitulation here, multi-month sell-off beforehand, where essentially buyers came in strong, they got their bags filled, their bids filled after that market sell side pressure exhausted, and then after the sell side pressure was exhausted, They added more orders and started market buying, initiated the wave of FOMO, and that drove up the rally. That's how it works. It's how the accumulators play the game of markets and they start driving trends. I don't think they're going to do it here when they're not seeing any other buyers come in, but rather continued sell side pressure. And this leads me again to talking about the altcoin market as a whole, guys. If altcoins get up here towards 230, we get a blue flip on our indicator. And we've had some time here, and still nothing's playing out. And to be fair, we're not seeing a complete, drop off the face of the earth. This isn't just going straight down. And we've never called for it to go absolutely down to the right? If you guys watch the content here, you guys know that at the end of the day, we're just focused on the fact that it's lower highs and lower lows. And then we do believe that we could come down here towards 150 over the next, say, few months here going to the close of the year. That was our first initial range where we would really get serious about building some positions or dollar cost averaging in a few of the strong plays in the market. But if you're going to DCA, you got to be, especially in this contraction environment, you got to be smart with your money because the market will easily take it away from you. This has been a big focus point here, not only here on the channel, but in our newsletter here on the channel, the Dash Report. One of the big things that I constantly emphasize to people here, and one that we're going to be talking about a little bit in this month's newsletter, is not being separated from the fundamentals, guys. I understand, when you think about what's going on in the world here, even if you're someone who's interested in kind of the macro analysis of what's going on in the world with inflation, central bank monetary policy, it's very easy to think that crypto is entirely separate from that. But unfortunately, it's not. And there are a lot of bad things going on behind the scenes right now. A lot of potential bubbles that are bursting right now. A lot of economic turmoil that could play out here over the next few years. And that's not being melodramatic. That's not being bearish. It's just really what's going on within the credit and overall banking system that exists today, that risk-on assets like crypto do depend on, or at least have ties to some degree, as it is highly dependent on liquidity. And if we're not getting a Bitcoin ETF anytime soon, if BRICS, like de-dollarization of that narrative is falling through where Bitcoin may rise as this kind of alternative asset, if the dollars continue to gain strength rather, and all of the narratives that have continuously played out are not really favoring Bitcoin and providing the substantial move for a higher run-up, then why are we going to go long on crypto with our capital? Why not wait for lower price levels? As those who unfortunately FOMO in each rally are going to have to start to slowly sell off as they have to cover for debts, as they have to cover for all the things underlying in the real economy that they thought, they'd be easily able to take care of and deal with, right? Reality starts to set in when you enter into recessions. And that's what we got to prepare for, guys. Hedging against inflation, preparing for a recession, and preparing for further correction in asset prices, even including crypto, especially crypto. So I want to go ahead and again emphasize that if you guys are interested to kind of get that perspective, and if you guys want to check out this month's newsletter, I think it's going to be a really jam-packed one. We're not only going to be talking about some of those underlinks within the economy right now that are really starting to look like they're about to break and cause a recession, but outside of that as well, you're going to have access towards our stock picks for the month. We think there's actually more trading opportunities right now in equities at the moment. But generally speaking, we will also cover altcoin picks as we go throughout the coming months when the opportunities arise. So that's another part of the newsletter. This month, we won't have any picks as per usual over the last year. But outside of that, you've got our trade alerts group. You've got our Dash Report discussion group where you can talk with hundreds of other members within the Dash Report community and share things, ask questions. And outside of that as well, you guys get access to our mid-month webinar where you can ask me questions and we dive through the charts. And in our newsletter, we cover crypto, stocks, Forex, and commodities. We do a whole 360 view of what we're seeing in the market. And you guys can get access to the Dash Report here at 20% off for just $240 a year. It's less than $1 a day. And on top of that, if you guys just want to trial it, you can also do it for $25 a month. It's a great way where you can support a lot of the free content we do here on the channel and all the kind of price targets and analysis we give here for free. But it's also a great way where you can get an additional 25, 33% of content on top of what we share here. You guys will get those trade alerts and all kinds of different things that can let you guys know more about how I'm trading in this market, if we're going long, if we're going short, and what we're really excited about here when it comes to the market and what plays we might eventually DCA into or start to trade in if we signal, see a sense of that momentum starting to signal the market. But anyways, I rambled on a good amount here, guys. I hope you guys are having a fantastic day wherever you are. And I hope you guys have a fantastic weekend for that matter as well. It's Friday already, can't believe it. But I hope you guys have a wonderful weekend wherever you are. Stay safe, trade smart, and I'll see you guys right back here on the channel at 6 a.m. Eastern Standard Time on Monday. Take care, everyone, and I'll talk to you all soon.